If you're trading on the Etoro platform, there's a 75% chance that you're actually losing money. If you're one of these people, stick around because I'll be laying out the reasons on why I think that is and what I think is the best strategy for you instead. As always, remember that nothing in this video is qualified financial advice. In fact, you really shouldn't be taking any financial advice from random geezers on the internet like me. So before making any investment decisions with your money, please consult with an investment professional. If you started investing on the Etoro platform anywhere in the last 5 years and you're currently in the negative, then you probably fall into one of the following categories. You handpick stocks, you invest using leverage and you got a trade that went against you, or you have a portfolio that is exclusively made of crypto. Right? So you're most likely going to be in one of these three categories. So let's dissect this a little bit. First things first, if the stock market is basically one big poker game, using leverage turns it into Russian roulette. Because of the margin requirements that go along with leverage investing, one bad trade can actually turn into a disaster pretty quickly and end up costing you a lot of money. I'll be making a separate video on the topic discussing leverage investing in great depth, but in short, leverage isn't necessarily your friend, and what I would say is learn how to generate money at 1x first before moving on to 10x. In other words, stop using leverage. Now, for the second and larger category, the stock pickers, and I'm gonna include the people who pick crypto as well in here. Any stock picking strategy is founded on a few key beliefs. Number one, that you have the skills to discover the most profitable stocks out there, and number two, is that you're able to do so consistently over time, which means that you're willing to spend many hours a week researching stocks. So, if you're a certified financial analyst who spends about 40 hours a week analyzing stocks, please stop this video now as it probably doesn't have much to teach you. But if you're not, then let's have an honest conversation about your approach to stock picking. First and foremost, let's ask the question, why are you picking stocks? For most of us, it's because we're drawn to the potentially very high returns that can be made from picking the right stocks. And it's true. If you look at companies like Apple, Tesla, or Nvidia, the returns on these stocks are truly phenomenal. But with the rise of social media, now more than ever, there is a huge marketing machine around the stock market that creates the illusion that those stellar returns are available at anyone's fingertips. Just look at all the TikTok and Instagram accounts of people that have become millionaires overnight from Bitcoin or meme stocks, right? So naturally, by looking at all that, we think, well, if they can do it, surely I can do it. But at the same time, 3 out of every 4 investors, so 75% of all investors on the Etoro platform, are actually not making any money at all. So clearly something doesn't really add up there, does it? And the truth is that statistically speaking, stock picking is actually a losing strategy. And here's a statistic that will probably surprise you. Out of the entire US stock market, so all the securities listed on the US stock exchanges today, which is somewhere around 15,000 securities, only 3% of those have generated higher returns than the S&P 500 index on a total return basis over the last 10 years. So what does that mean? That means that in 97% of cases, over the last 10 years, picking a stock would have been a bad strategy. And of course, this sample is huge and it really includes any company that is listed on US stock exchanges. And among those companies, there are plenty that are obviously terrible, and people with no financial knowledge whatsoever will be able to identify them as bad companies and not invest in them. But those are still some pretty daunting statistics for stock pickers out there, and most definitely show that the odds of stock picking are overwhelmingly stacked against you, and do, in part at least, explain why so many people are actually losing money on the Etoro platform. They are consistently picking the wrong stocks because statistically speaking, they're much more likely to do so. And if I gave you some of the names of the companies that have overperformed the market over the last 10 years, I'm pretty sure that there's plenty of them that you have just never heard of. How much do you know about companies like Green Brick Partners or Monolithic Power Systems? I had never heard of them, but apparently these are companies that have generated on average around 40% a year for the last 10 years. Which brings me to a second question. How exactly are you finding your stocks? And I feel like here people can generally fall into two big categories, or perhaps somewhere in the middle of the two. On one side, you have people, and I have been victim of this myself, whose process of stock picking is very much influenced by media, social media, and the overwhelming feeling of FOMO that you get when you see someone posting like a 1,000% or 2,000 or 5,000% return on a stock, and you're just feeling like you're missing out. But if your decisions on stock picking are based on or even influenced by other people posting their huge gains, well, then you're never going to realize those huge gains, because in order to realize those huge gains, you're going to have to ride the wave long before anybody else is, and you're going to have to be one of the first people in there. i.e., once you hear about it on social media, it's just probably too late, or at least it's too late to generate those incredible returns. I mean, any stock that is backed by a good, profitable company can always generate you money, but we're talking about like the 3% of stocks that are going to beat the market. If you're going to find those, you're going to have to find them before everybody else. Therefore, if you hear about them from social media or your friends or your family or the media in general, well, probably it's just too late. So the second half of stock pickers are probably going to be a little bit more research based. So these are people that are probably going to dedicate a little bit more time into researching companies online, reading up on them, and trying to base their opinion on some of the information that they have read online. And here I would like to ask the question, are you a subject matter expert? When analyzing stocks like Nvidia, for example, do you have the knowledge to fully understand its business model and to be able to determine whether that company has a competitive edge over another semiconductor manufacturer? See, most professional funds out there have equity analysts that are highly specialized in one sector of the market, often a subsector of the market. And these are people with pharmaceutical backgrounds, medical backgrounds, engineering backgrounds, tech backgrounds, people that have the skills to be able to identify why a company in a certain sector will have or might have a competitive edge on another one. So they can look at a pharma company or a semiconductor manufacturing company, understand its business model, and say, this is the one. This one has a moat, as Warren Buffett would like to call it. It has an edge over the other ones. It's currently, not being valued properly based on this competitive edge that it has. So therefore, we should put all of our eggs into this one basket. But even those people get it wrong a lot of the time. But I guess they're in a situation where they are most definitely making the most educated possible guess that one could make on a company. So I would say if you're going to be picking stocks, well then you would need to really be a subject matter expert in your area of the stock market. And if you're going down this route, you should most definitely be spending a lot of time developing that knowledge and those skills in order to be that subject matter expert within your field. And if you do have that expertise, then let me ask you, what does your process look like then? Now, I read a lot of financial news, and I know that for every single person, very qualified person that comes out there and says, rates are going up, inflation is going down, this stock is undervalued, that stock is overvalued, there is another equally qualified person with as many years of experience that is saying the exact opposite. Honestly, it's actually quite comical sometimes, but that's pretty much how financial news works. For every article that pulls you in one direction, there is an article that will push you in another direction, and very often they both come from very reputable sources, and it's really hard to distinguish the two. So the only tool that you have to be able to cut through the bullshit and actually get to the quote-unquote truth is, first of all, like I said, have the correct background to be able to do so. But number two, time. Time is probably the most valuable resource that you're going to have, and you're going to have to be spending hours and hours and hours and hours. I'm talking like hours every day analyzing stocks to really fundamentally understand which stock is going to be the winner. Because if you're not willing to dedicate almost your entire free time to becoming a subject matter expert and researching stocks, well then stock picking really then isn't for you. So if you're currently losing money on Etoro, you're either not someone that has the many years of experience needed in order to be a subject matter expert on one portion of the market to be able to differentiate between company A, company B, and company C, or you do have that expertise, but you're just not interested enough or willing to spend all your free time differentiating between company A, company B, and company C, reading up every possible article on them, doing discounted cash flow analysis, etc., etc. Which brings me to my final point. If you're someone currently investing on Etoro, you aren't highly specialized in an area of the market. You're not spending a good 40 hours a week researching stocks. You're somewhat influenced by FOMO when making your investment decisions. It's time for you to stop what you're doing, stop trying to beat the market, and buy the market instead. Because that will be the most profitable investment strategy that is available to you currently. In other words, you're much better off putting your money into a fund that tracks the S&P 500 index and just forgetting about it. I hope the video today has really highlighted the odds of stock picking successfully and how against you those odds are actually stacked, and the amount of knowledge and skill and time, most importantly, that is required for you to actually be a successful stock picker. And don't forget, you're fighting for that top 3% of stocks, right? You're fighting for that top 3% of stocks, and you're fighting to be the first one to discover those top 3% of stocks. So that really puts you in the highest possible bracket of investors out there. And being there and staying there consistently over your lifetime, because you will need to be investing over your lifetime, is something that is truly incredibly hard to do. And if you're not willing to dedicate your entire spare time, free time to do this, then there's absolutely no way that you're going to end up there, unless, of course, and this is possible for anyone, you just get incredibly lucky. But that's not really a strategy, that's just getting lucky. I'll be making other videos on which funds I think are best to track the S&P 500, and most importantly, why the S&P 500 is already so efficient and successful at generating returns. But I really hope that the video today has already been a good start for those of you that are actually losing money on Etoro and would put you on the right track to change that. Thank you for watching, and don't forget to like, subscribe, and definitely let me know in the comments what your experience on Etoro has been and any strategies that you're using at the moment.